the outpatient, dental, optical, and last expense. And all these different benefits range from coverage from 15 million to 150 million. Then also, for people that are eligible to be covered, it's between 18 to 59 years of age, because you can take it as an individual, or you can take it as a family. And as for the children, the child has to be between 1 month to 17 years of age. So they be dependent on the parents. So that the dad can be the principal, and then the spouse, and then the children are the dependents. And then also the benefits that we cover, I talked about the inpatient cover. That's where an individual is admitted in hospital. And when someone is admitted in hospital, excuse me, so there we load 15 million to 150 million on their card for the inpatient benefit. Then for the outpatient is where an individual comes from home and then goes to hospital. For outpatient, we load between 1.5 to 4.5 million shillings on the card. Also, maternity, although maternity for it, it's optional, and also outpatient is also optional. But then for inpatient, for it, it's compulsory. So you can decide that maybe you do not want those benefits and you take only inpatient. But then someone can come in and then they're like, they want the inpatient, the outpatient, the maternity, the optical, the dental, and the last expense. So for the maternity, we cover from 2.4 million to 4.5 million shillings. Then also the dental benefit, which also we cover from 150,000 to 1.2 million shillings. And then there are different things there that we cover, like the routine cleanings under dental, fillings and restorations, extractions, things like that. Then optical, still also optical is how much we load on the card. It's between 150 million to 1.2. And the things that under optical that we cover: eye examinations, the glasses under frames, then replacement coverage. Then for the last expense, this is when, in case an individual who has been on cover passes on, there's a particular sum of money that we give to the beneficiaries to help in the burial preparations for the last expense. And also we cover between 1.5 million to 3 million shillings. Then we normally, when you on cover, we normally have what we call a waiting period. So for the first 30 days, it's we cover things like accidents. However, for the other illnesses, we don't cover. But after that waiting period of 1 month, you can be able to start receiving treatment. Then also we have waiting period for other illnesses. For example, like for cancer treatment, it has a waiting period of 2 years. Then for fibroids, a waiting period of 1 year. Then also maternity has a waiting period of 1 year. So in case someone comes when they're already pregnant, that means we are not covering them for maternity until that waiting period is over. So when you renew your cover, that's when we can be able to cover you for maternity. So basically that's about our JKR product. And then I can take you through also, we shall receive, I will be able to answer the questions after. So then also for our Just Senior plan, which is from 60 to 80 years of age, it's for our senior citizens mainly. And for it, we cover only 4 benefits. That's inpatient, outpatient, dental, optical. They are the only things that we cover. So, and then just like I said, that we cover from 60 to 80 years of age. And for it, the benefits, the limits, we cover from 20 million to 160 million shillings. Then the other thing about our Just Senior cover, for the waiting periods, instead of having 1 year waiting period. For all our pre-existing conditions, we have 6 months waiting period. So when someone comes in, when they are senior citizens, we take them for medical checkup. When we take them for medical checkup and we find out that they have pre-existing conditions, we do what we call loading. So when we load, an extra amount of money is added onto what they are supposed to pay. So what I'm sharing here on the screen, how much we cover for the dental cover, which is 300,000 to 1.2 for dental. Then for optical, it's 300,000 to 1.2 million shillings. So here it's talking about the waiting periods, the one I had talked about before. For the different, for example, here for the fibroids, we have a waiting period of 1 year. Then for HIV, we have a waiting period of 6 months, just like I had talked about it before. And then also for cancer treatment, organic transplant, they also have, for them, they have waiting period of 2 years. Yeah, basically that's it about our J senior product. Then for the J junior, that is from 1 month to 17 years. So you can decide, instead, if you feel that your child, you cannot, you feel that you do not want the cover, you can purchase for only your child. Yes. So for it, we cover 5 benefits. We have inpatient, outpatient, dental, optical, last expense. And the coverage is from 15 to 150 million shillings. It's from 1 month to 17 years of age. For inpatient, for the inpatient cover for J Junior, still it's between 15 million to 150 million shillings. Then for the outpatient, it's 1.5 for the limits to 4.5 million shillings. Then dental, it's between 150,000 to 1.2. Then still even optical, it's still the same thing. That yes, please. I had like someone was saying something. So for optical, still under judging the things we cover: exams, glasses and frames, then replacement coverage. Yes. And then last expense, just like I explained in the J care, still it's the limit is between 1.5 to 3 million shillings. And then basically that's it for our this table here. It's just giving a brief summary of all the 3 products. For example, like for the J Junior, it's for individuals and the families. Then for the senior citizens, you can only cover the senior citizen, including your spouse. Then for the ages, the J care is between 18 to 59 years of age. For the J senior, it's 60 to 80 years of age. Then for the J care, we cover inpatient, outpatient, maternity, dental, and optical, and last expense. Then for the J senior, we cover inpatient and outpatient. We do not cover maternity. Maternity is not included there. Then we cover optical and dental. Then last expense is not there. Then for the J junior, it's between 1 month to 17 years of age. Then we cover inpatient and outpatient. Maternity is not there. Then dental and optical, and then last expense. Then also as Jubilee, because we understand that people sometimes have financial challenges. So we also have that option whereby in case someone feels that they want the cover, however, the premiums are so high, we have what we call our IPF option, whereby you can pay in installments, but it's a loan, but later on you have to keep paying back. So that's it for our medical plans. Thank you very much.
Thank you so much, Hasfa, for your presentation. And I'm seeing that there was a comment here in the chat, comment and also a question, and it's from Trisha Atiero. Friends, please feel free to raise up your hand or put in the chat your questions or comments. In case you didn't understand something or you need any clarity, kindly put that in the chat. We shall be able to answer the questions. Trisha is saying that most people get this insurance from workplaces, but how can you help someone that is self-employed or not employed by government or an NGO access insurance? Over to you, Hasfa.
Okay. Thank you very much, Becky. And for that, if someone is self-employed and they want to access medical insurance, then they can still come and purchase the medical insurance. And if, just like I had talked at the end of the, when I was almost finishing my slides, that in case someone feels that the premiums are so high, we also have our IPF, um our IPF, where someone can pay in installments, so that they can be able, each and everyone can be able to receive medical insurance.
Okay, and maybe just to add to that, yes, we do understand that most people who are employed, especially in government facilities or private institutions, they tend to have coverage as staff as part of their benefits. But like we said, not like for the junior cover, most places may limit the number of children that are covered. They limit the number of children that are covered under the benefits. So you find yourself that maybe that they're covering only up to 4 children, and maybe you have 6, meaning that you'd have to like purchase that junior cover for the other 2 children to be able to access medical insurance in the hospitals available. And yeah, that's basically it. Hope we have answered that question. Like she's mentioned before, you can get the product. Sorry, the medical insurance where you are able to pay uh, slowly your premiums or get a loan, and you're able to pay back slowly. And I'm also seeing some other questions here. Um, okay, how much are the premiums? Hasfa, I believe you can also answer that.
So thank you very much. How much are the premiums? Normally what we do what we call quotations. These quotations help us to know how much it's going to cost you to be able to purchase the health insurance, and they are done according to how old an individual is. However, where we I can just give you an estimation. Like, for example, for the J Junior, for a child that is between 1 month to 17 years, they annually, because medical insurance is annual, and a child can be able to pay 1,010,000 shillings. But just like I said, you share with us how old you are, and then we are able to do what we call a quotation for you. And because you might tell us that, me, I want only inpatient cover, or you can say that I want only inpatient and outpatient, or you can say that I want everything on cover. So it's according to how old you are and the different benefits that you want. Then we can be able to calculate for the premiums for you.
Okay, and I believe in regard to that also, in order to know the actual premiums, you can preferably, like we've shared our contacts, so she's shared her contacts on the slide. You can just inbox her either on WhatsApp or email, and she shares with you an actual quotation. The most important thing that we really need from you is the age, whether it's for the parent or for the child or anyone that is being covered. We need the age in order to determine which cover they are going for. Yes, and then there's another question from Trisha. How much are the installments for a self-employed person, and for how long is it paid? Again, Trisha, like I said, some of these things are really personal, so you can just inbox us and we draft something that you can clearly look at, a quotation that you can clearly look at, because we need to know what benefits you're interested in as a person, and we draft the quotation accordingly. That is what I can encourage you to do. Maybe just Hasfa, you can share the slide that has your contacts just one more time, and then we can go on from there. I see a hand from Hope Oroma. Kindly unmute and go ahead and ask your question, please.
Hi everyone, I'm glad I've joined. Though I interrupted a meeting, I just saw status and poop came in. But I wanted to know about you guys' unit trust program and how much I can invest in a unit trust. Because I've been looking for people I can trust and I got lost, but I'm really interested just in the unit trust. Thank you.
Thank you so much, Rob, for your question. We shall be getting to that in the next part of the presentation. The first part was mainly dealing with our health products, but I've definitely noted that down, and we shall be able to answer that. Friends, if you need anything to do with the health insurance, Hasfa has shared her contact there. Please feel free to reach out on her WhatsApp or even her email. She'll be able to get back to you. If you need a quotation, if you have even further questions or even something that's personal regarding health insurance, you can get in touch with her. Okay. Guys, if we are fast, please let us know. We don't want to assume that everyone is on the same page. So please let us know if we are very fast, really. Okay, I'll be proceeding on to share from our life products, or what we call our investment products, and kindly just share thumbs up if we're all at par, if we're all at the same page at the moment. Okay. Alex, it's good to see you. Okay, great. Then I can proceed. Just going to share my screen. Excuse me. Okay, kindly let me know if you're able to see my screen. Okay. Great. Okay. Okay. So what I'm going to be sharing is more of what most people know as saving plans. For some, they call them policies. For some, they call them investment plans. Some are pension plans. So I'm going to dive into that. And again, I will emphasize, please raise your questions in the chat or put your hand up. My colleagues, Daniel and Hasfa, you can alert me if someone has put their hand up, if there's a question in the chat. So regarding life insurance, insurance. We have different reasons as to why we save our money, and they are really, really personal. Like this particular, is it picture diagram, whichever one really enables you to understand this better. But the picture shown is to show you the reason as to why most people tend to start saving, really. And it may be a way of you having financial stability, you have your legacy that you're planning for, you want to have an estate, you want to buy land, it could be health for your loved ones, like Casper just shared before. Um, Reduction of taxes, because really when your policy or your investment plan matures, that money is not taxed. It could be that maybe, yes, you are employed and your NSSF is, saved every month. And yes, you want to have something that you can access as soon as possible. Most times when NSSF, you have to wait for a particular age in order to access anything. So this can be something that you can invest in at least a minimum of 5 years. Really can be something, because many of us, you may be employed, but 5 years can end in a very short time and you don't really have what to show for it, but you're telling people that you're working. So these investment plans enable you to have that financial security, to know that even after the 5 years, I'm able to do something for myself, for my family, for my loved ones. And even still, to make it even more personal, really, all of us belong in a family. We've had a lot of black tax. There's a lot of black tax. The parents need to be taken care of. You're having your own children, you're having your own goals. The cousin needs this, Auntie Gundi needs school fees. There is a lot that is taking money left, right, and center. So for some of you, it could be a way of, keeping the money in one place, such that you can be able to plan for it better, because when money is readily available, sometimes you don't exactly see what it has done, where it has gone. So I will start off with one of our investment plans, which is what we call our Invest Plus plan. So basically this is one of our products, and I'll just highlight a few things about it. One, it looks at a policy term of 5 years to 20 years, the minimum being 5 and the maximum being 20. So you can choose the number of years in between there that you feel you're comfortable saving for. It could be 6, they could be 10. Like I said, each one's financial goal is really personal. And the eligible age for this particular product is looking at the ages between 18 to 65 years. If you're 18 and you know you have an income, it is stable, it is okay. Put up your saving plan. We shall be able to proceed from there. As long as you have a valid national ID, you can be able to sign up with us. And the minimum sum assured is 20 million. For this particular product, why we're saying 20 million is that depending on the number of years that you choose and the premium that you're paying, the minimum amount that is to be paid out to you is 20 million, a sum of 20 million. Yeah, those are the unique policy features about this particular product. Now, moving on to the benefits. The type of benefits for this particular product, they are guaranteed returns, meaning that you get full 100% plus the interest. This particular plan has grown over the years that you've been saving with us. And the maturity benefit is given to you at the end of the saving period, whether you chose 5 years, whether you chose 7, whether you chose 15. You are only able to access this money after the saving period. And I really want to emphasize that, because many at times you find that at the point of selling, someone has told you these policies for 5 years or 5 years and above, and you've probably chosen 7, and you reach probably 1 year into the policy and you're like, Manande, can I adjust? Remember, these things are legally binding once you sign the document. So you have a right as a client to fully ask every single question. And that's the challenge we tend to face, especially in the industry in Uganda. People do not really want to ask, yet it's also your right to ask and understand what you are signing up for, such that you understand the value that you're taking up. And so every policy that we have has an inbuilt death benefit. And this particular one has 20% of what you are expecting at the end of the saving period. I will give an example, but just before I give the example, I'll just mention this other last benefit. It has an inbuilt waiver of premiums, meaning that it automatically starts upon death of the policyholder. I know many people don't like to talk about death, but again, remember, insurance is something to help you overcome uncertainty. You do not know when such an event may occur, whether an accident or someone's death may occur. You just never predict such things. So this is just to help you, cover you, that in case this happens, how have I left my children or my wife, or how will I leave my business standing, or whatever assets I've left behind. So the 20% is what the beneficiaries or beneficiary that is named on the document. I will emphasize that if they are not, they do not get anything on the benefits of what has been saved. So at the time of death, 20% of what is expected in the 5 or 7 years you've chosen is paid to the beneficiaries. And at the end of the saving period still, they are to receive the full amount of what was promised from the beginning. That's why we call it guaranteed returns as part of the policy. I'll give an example just to drive this home really. To explain the death benefit better, I'll give an example. If someone has opened up, for example, for 6 years, a policy of 6 years, and let's say they are expecting around 200 million in the 6 years, and in the unfortunate incident that they passed on, whether it's at 3 months, whether it's at 2 years, whether it's at 4 years, as long as the policy term has not yet ended, they are able to, the company, Jubilee, is able to pay you, the beneficiaries, the 20% at the time of death. Once investigations are done by the underwriting team on our side, and it's seen that there's already a death certificate, this is a cause of death, they go through all that whole process, then they can start the claim process of that 20%. Now, 20% of the 200,000 is what is given to the beneficiaries. Then when the 6-year period ends, the full 200 million is what is given to the beneficiaries still. Why? Because it was promised from the beginning as a guaranteed amount. That is how much it protects the beneficiaries or the policyholders' loved ones. Okay, and I'll move on to the next slide. There are additional benefits, but they are optional. And these are mainly two for this particular product. We have what we call our TPD, which is total and permanent disability. I'll still give an example because this looks at in case someone is disabled, maybe because of an illness, it could be stroke or from an accident. Maybe your arm was, cut off because of the accident. Maybe you became blind because it's also a disability. And all of that, like I said, investigations are done to understand better that this person is actually disabled permanently. So it simply says that it secures an equal amount to the sum assured. Let's say, I'll give a same example of the 200 million, payable in equal monthly installments over a period of 36 months from the date of the accident. Now, 36 months is an equivalent of 3 years. So meaning that if someone becomes disabled, whether it's at 6 months or 2 years, that 200 million is split into the 36 months equal installments paid back to you on a monthly basis, and the policy is closed off after that period, meaning that you're no longer paying premiums. They're automatically waived off because you're no longer able to work. Then for the hospital cash benefit, it simply says that it pays you the life assured a sum of 100,000 per night spent in a registered hospital, whether it's government or private, but it's subject to a maximum of 25 nights per year of the policy term. And this benefit, there's an emphasis there that it applies only when the life assured has been hospitalized for at least 3 consecutive nights and above. Let me just explain it in literal terms, really. that if you have a policy, again, I'll use the same example, 6 years expecting the 200 million. Each individual year of the 6 years is subject to a maximum of 25 nights, meaning that if I fall sick and I'm admitted in hospital for more than 3 nights, I simply come back when I'm discharged and I claim for that money with the evidence from the hospital. And each night that you spent in hospital, if it was a week, it will be 700,000 that you're claiming for. If it was more than the 25 nights, they pay you only up to the 25 nights that were spent in hospital. If there were 30 nights, they only pay you up to 25 nights in hospital. But please, I'll also emphasize, this money that they're paying you is not to clear your medical bill. No, it's simply as a way of supporting you for what you may have probably consumed as you were in hospital. But remember, again, these benefits are optional. You can choose to add them to your premium or not. It's not a must to have them. But for the sake of your peace of mind, you can choose to have them as part of your premium, meaning that if you're paying, for example, a premium of 500,000 per month, you would have to include an amount of like maybe 20,000 just for the sake of these additional benefits. And remember, it's also not part of what you are to receive at the end of the maturity period. This is just to cover you in case of any of these things happen to you. You got an accident and you become disabled, or you're admitted in hospital for more than 3 nights. Okay. The other benefits that we have are what we call a surrender value, that the policy, someone is able to surrender their policy only after a period of 3 years. Below 3 years, you cannot access your money, meaning that at the period of 3 years, you as an individual, you feel like beyond reasonable doubt, you are no longer able to sustain paying these premiums. That's why in the beginning, we let you know the options of the premiums that are available, and you choose an amount that you're comfortable with and you know that you'll be consistent with throughout the saving periods. But like I said, some of these moments are really unpredictable. You may lose a job, you're laid off, and that kind of thing. Unfortunately, we're also bound by the terms and conditions as per the policy. So if the policy has not yet made 3 years, definitely the policy will go into what we call, in insurance terms, they call it a lapse state, but in simple terms, the policy becomes dormant or inactive. Again, I'll give the example of the 6-year policy. You've opened up a 6-year policy, you're expecting your 200 million, but somewhere along the way, maybe at 1 year down the road, you have financial issues. One, you can be able to access a loan against your policy, but after the policy has made 3 years. But when the policy, you've reached your 1 year, you've made 1 year in the 6 years, but you're not able to sustain the premiums coming through, your policy can easily go into what we call the dormant state. Now, the dormant state comes about when the policy has gone beyond 5 months of missing premiums. But I will emphasize this, and I want you to hear this information firsthand. When your policy becomes dormant before the saving or policy term ends, before the 6-year term ends, you still have a chance to come back and reactivate when you get back on your feet financially. Okay? When your policy becomes dormant, it does not mean that you've lost your money. No. Unlike many people who misinform, it is not the case. As long as a 6-year period, your policy term has not yet ended with us, even if it's a week 2, you still have a chance to come back and reactivate your policy. Now, reactivation happens in 2 ways. One, you can choose to do what we call a redate. A redate simply means that maybe I have 8 months that are missing. Obviously, my policy is already dormant or inactive, but I'm only able to clear a month or 3 months. It is okay. Come back and reactivate by clearing the 3 months, meaning that the other 5 months are simply pushing your maturity date forward by the number of missing months. And you carry on and you still get your benefits at the end of the saving period, although the saving period policy maturity end date has simply shifted ahead by 5 months, but you still get your benefits. Or the other alternative is that you can be able to reactivate by what we call a revival. A revival simply means that the 8 months, you're able to clear each and everything, but there is a penalty fee involved. But the advantage with the revival is that your maturity date is maintained the same, and your maturity date only qualifies when you are more than 12 years to your maturity end date. If it is the 6 years, as long as it is not a year to the end of the 6 years, you can be able to qualify to do what we call a revival and reactivate your policy and still get the full benefits of the policy. The free look period is 30 days from the day of the policy being issued. You have 30 full days to question yourself and ask yourself, sincerely, Rebecca, am I able to sustain this? Do I still have other questions? The 30 days are also for you to look through that document, please, and understand it fully. They say if you want to hide something from an African, you hide it in writing. Please, I urge us family to read. Take the time to read. If you do not understand, make the time and ask. Because this is your hard-earned money, make the time and ask where you do not understand. So this is just an example of someone who just have their random name. We're looking at Muchiwi Ezra, and he's asked for a quotation. We are looking at someone's age next birthday. Of course, they are 31, but we look at age next birthday in insurance. And in insurance, age is a big factor that influences the outcome of what you get at the end of the saving period. Now, like I said, it's a guaranteed product, meaning that what you see here as the 40 million is what the client is going to get at the end of the saving period. Like I said, the 20% is the death benefit of this 40 million, which is the 8 million that you're seeing here. And it's broken down that this person told us, this is just an example. This client has told us that they want to get 40 million. So we draft a quotation according to their target, which helps us break it down that their premium will be like this. They're probably looking at monthly amounts of 600,000, quarterly amounts of 1.7, semi-annual, which is more like half yearly or every 6 months. You pay twice a year, 3.5. The annual amount is around 6.8, and you see the total amounts. This is the actual amount the client has paid, and this is the amount they will be getting at the end of a saving period. And like I've said, if you choose to add the benefits that are optional, the total and permanent disability and the hospital cash benefit, these are the premiums that you're looking at, the 635, the 1.8. You realize that they've gone up a bit because you've decided to include these as part of your premiums, but you see that it does not affect your maturity value. It is just simply to cover you in case these events happen to you. Hopefully this quotation has helped drive this particular product home. Okay, now we're looking at someone who has said that they can handle a premium of just 500,000. Remember, someone can tell us their target amount, and we draft a quotation according to that. Or they can tell us this is what they can handle, either per month or per quarter or per half year or per year. This person wants to do 500,000 per month. In the 5 years, they shall have saved 30 million. Like I've said, age is a big factor into what you get at the end of the saving period. So this person is looking at a guaranteed sum of 33 million, inclusive of what they have paid, which is the saved, which is the 30 million. Sorry, just a moment. Yes. If they choose to include the optional benefits, they are looking at a sum of 524,855 shillings, which is the actual premium if they choose to include the optional benefits. But if they do not, they'll still stay with the 500,000 and move on from there. So that's basically it about our first product. Then also with Jubilee, we also have pension plans. Now, in the pension plans, we have what we call a personal pension plan. You can do this as an individual, okay? And you are able to make contributions towards your retirement. You people, it's a very good thing to save and plan ahead, because like I said, insurance is there to help you overcome uncertainty, to help you deal with certain things you have no control over later on. You can be able to deal with them when you have your money saved and properly and it's earning an interest for you. Okay, so just share a few details about this. What are we looking at in terms of benefits under this particular scheme? Well, for one, this personal pension plan is one of our products that we have that is for a year. And you can save for a full year and choose to extend up to 5, 10, 15 years, depending on what your financial goal is. But after a year, you're able to access your savings, but you're not able to access them before that 12 months or a year has ended. And with this, unlike the previous product I just shared, it is flexible. How or what do I mean? If I choose that I want to save a premium of 200,000, I can choose to do it per month, or I can alternatively keep on increasing or decreasing the amounts, but the minimum we look at is at least 200,000 shillings a month. Then, like I said, they all have an inbuilt benefit of death. In case of death and permanent disability, the member will receive full payment of their benefit. Now, what are the features that this scheme is looking at? First of all, they're saying after a year, you can access your money or even partially withdraw. If I've saved my 10 million and I want part of it, I can access part of it and the rest continues on into the next year. Like I've said, you can save even up to 5, 6, 20, 30 years, depending on what your goal is, because the goal here is saving towards retirement. You don't want to start stressing people when you're already ahead the other side. Then, the other benefit is that you can increase or decrease the money depending on how much you are able to save at that particular time. Maybe you got like a bonus, maybe you made a deal and it went through and you feel like, I do not want to touch this money, I want to put it aside and enable it to grow even more. You can be able to increase the monies. If you have your 200k this month, maybe you want to save, you got a deal and you made 5 million and you want to save 2 million, it is okay. And then it is 100% convenient. You can make payments through mobile money, through check, through a standing order or deposits, depending on what is convenient for you as the client. And we also are able to provide statements, but we can also share with you a link once you're registered with us where you can be able to view your statements any other time. And payment mode, you can decide to pay yearly, monthly, quarterly, or even half yearly. And the funds keep on growing each time you contribute. Why I say that you are able to increase or decrease the money according to how you're able to save and when you're able to save, it's because I'll give an example. Someone who said they are saving 200,000 per month, but at the end of the year they kept on increasing the amounts and they probably ended up with like 20 million, and someone who stuck to 200,000 per month, the amount of interest or what they get at the end of the year is not the same, because remember, someone else decided to increase the amounts and another person decided to remain constant. The interest rate may be the same, but of course the amount that has already come through in the year is what will differ. Someone who has ended the year, closed the year with 10 million, and someone who has closed the year with 5 million will not get the same amount of money. It will be different. It can't be the same amount. That is what I mean. And then there is no management or administration fee once you sign up with us. You just fill in the form appropriately, share a copy of your valid national ID, and also pay your first premium through the bank on the Jubilee accounts or through agent banking, but still on the Jubilee account that we provide. And then you can choose to terminate or withdraw your funds after a minimum of 1 year. If you feel like I can no longer continue, I'm not able to sustain this, it's okay. After a year, come through and withdraw your money. And you can also do as many years as you want. It's a tax relief benefit and there's no setup fee. The minimum age for or eligible age is 20 years and above. And why I was saying 200,000, really 100,000, yes, we may accept it, but I'm looking at you as the client being able to benefit something substantial at the end of the year. And the minimum saving period, like I mentioned earlier on, is for 1 year. General requirements are basically a copy of your national ID, both sides, and the correct proposal form filled in, and receipt of payment for your first premium from your bank of choice. I don't know if this illustration is quite clear. Just share a thumbs up if you're able to see this clearly. Sifa, are you able to see this illustration?
Yes, I can, Becky.
So this is an example of someone who is starting to open up a personal pension plan, and it projects up to around 5 years, and the interest rate used was for around the year 2022, 2023, which was 10.57, just to give us a full picture of what this looks like. Now, this person has decided to start up with 200,000, meaning that in the year they've invested 2.4. So if they applied the interest of 10.57, they've earned an interest of 253, closing the year with 2.6. If they choose to withdraw, they will draw the 2.6. If they choose to continue on to the second year, that 2.6 is carried forward to the next year. Now, this 2.6 is what is like the opening balance for the next year that you're continuing. If you continue to go on with the 200,000 per month, you've invested another 2.4, meaning that you've closed the year with 5.53. If you add that interest again, like I said, the interest keeps growing depending on what the year has closed with, on what you have saved. So this person's interest is on the 5 million, which now becomes 534, meaning that they've closed the year with 5.587. If they choose not to withdraw, it still grows, and they've constantly saved their 2.4, 200,000 every month. In the third year, they're closing with, they've invested 7.98, and the interest is applied again. They've grown their interest and they're adding 844, meaning they've closed the third year with 8.8. So from 2.6, it goes to 5.5 to 8.8. It continues on to 12.4 to 16.3. So you realize that in 5 years, you've actually saved a substantial amount, and it can help push you in whatever financial goal you had. Maybe you had further studies to go for, maybe you had your children going to campus. This can enable push them for a good number of semesters. If you wanted to buy a plot of land somewhere in Uganda, there are plots of land that could go for that amount of money. So it depends really on what goal that you have. Maybe you also planned your vacation, like this year I must cross over from Africa and cross the ocean. That 60 million, my dear, can help you achieve that. You can't take that lightly. And even from really the third year, like I said, you can access your money even after a year. That 8.8 in the third year can fully cover your vacation bill, and you can move on with your life and even start afresh. Okay, that's basically it with the personal pension plan that we have, and those are the products that we do have. Of course, there are other investment products where you are able to pay a lump sum in the beginning once, and you're able to keep on withdrawing the interest, or leave it there at once and just withdraw everything with the interest at once, which we have as our income drawdown plan. But for that, you can get in touch with me and I can explain it further. But that is basically it from my side. I think I'll pass on the mic back to you, Danielle, if there are any questions. If there's any query someone wants to ask, you can raise your hand, please. Hello, hope I've been audible. I've not been speaking to myself. Yes. In case there are any other questions, please let me know. Daniel, over to you. Maybe you even have your own questions ready.
All right. Thank you so much for those elaborate explanations, especially about insurance. And members, this is an opportunity for us. By the way, you could find this is a moment whereby you, if you notice, as Mrs. Muchibi said early, saying that you find people walking to the hospital with a card, and for you, you wanted a card for yourself. You can actually get for yourself a card, and you let go of the hassle of someone falls sick, you need to struggle and get
You put
you
up a
need to get
meeting.
money and go to the hospital and so forth. But I think I want to thank you, Tim, for really educating us about your packages. I believe anyone who is interested, Becky is always available in our WhatsApp groups. We can always reach out to Becky, and if there could be any other questions that we have for this insurance team members, guys, let's bring up our questions. But if there are no questions, then probably I believe we have exhausted everything that they have said. And I believe most cases also, people may not have questions exactly at the right time, but I believe Becky is very reachable if you have any issues that maybe in the next future, or tomorrow next, or during the week, you discovered that you wanted to ask a question about how to invest for life, how to help yourself. Uh, Imagine investing for your future. How do I invest for my future? You begin saving with them right now, and money keeps growing in your life. And
Mm,
once when it grows at the end of the year, members, we are going to reach a stage when we cannot actually support ourselves. But if
true.
we could begin saving right now, just imagine you begin
Makes a
saving right
difference.
now, and what we have saved would actually help you in future, would help you still stand on your feet, because we have children. And with the knowledge I have seen right now, children are going to grow. Children will also start struggling for their own life. they'll
Mm,
start they'll start fighting for their own future, and they will have responsibilities, and you as their parents, you'd be left alone. And so you need to really think about yourself.
Black
And thank
tax
you
is
so
real.
much, the Jubilee team, for actually teaching us. And I believe more questions will come up. This is not our number. I'm actually very surprised that we are very low. Our number is always 90, 98, 120 people are in attendance. I am thinking, because this is the first time this year, the Great Family has a very low number. But I believe in the coming, we will still keep giving you slots, especially when you come up with a good, clean packages,
Okay.
maybe new packages that you have and that might be very resourceful to the community. That
Mm,
said, I want to give an opportunity to the Great Family CEO, that is Mawabeka, to just greet us, and maybe if there are informations that we need to hear. Those ones who are joining us for the first time, you are most welcome. The Great Family CEO Becca will speak more about the Great Family, what we do, what happens here, and so on and so forth. So allow me take this opportunity to give to Becca. Becky, Rebecca, I see your hand is up. It's like you want to
yes.
communicate something.
Yes.
Allow me give you that opportunity before I invite Becca.
Thank you so much, Daniel. Sorry for interjecting. And maybe just really to inform or just to emphasize really that one of the things as a person, really as an individual, that I fight, especially in this industry, is misinformation. Colleagues, you have a right to ask. And as long as it is your money, you need to make time to understand what your money is exactly doing. Many people, you've heard of the saying of, people of insurance are thieves. Most of the time, it is from a point of frustration of someone not having understood what they signed up for. Because whether a client likes it or not, the terms and conditions will always apply. So as long as it is your money, it is your hard-earned money, please make the time, not find the time. There's a difference. Make the time to understand what you're signing up for. Personally, I even ask you the questions until you feel you are comfortable, that you've understood. By the time you put signature to paper, you understand what you are taking up on. We walk the journey with you throughout. I'm seeing just a point from Alex in the chat that if you want to sign up, you can always send me a WhatsApp. I can help you on board. I can take you through that process. But like I've said, the requirements are basically three: a valid national ID. Depending on the product that you're taking, you'll have to fill in an application form. And thirdly, depending on what premium you've agreed to pay and the number of years, you make your first payment and we proceed on from there. You can be able to track your savings as and when you want to do so. But I encourage each one of us, especially if you are working, you people, your work areas are not entirely guaranteed. People are replaced left, right, center for no reason. Take up this chance to have, even if it's a 1 year policy, so that you can do something valuable for yourself. Stop stressing others every single time you want to do something in life. You can do this as an individual. The question is, do you want to understand how your money can work for you? Thank you so much, Danielle. Like I've said, my contact is available. You can reach me on WhatsApp or email. Like I will be sharing that in the chat. Thank you so much, Danielle. Over to you.
Yes, thank you, Rebecca, for that insight. I think one thing I am sure, even including myself, we want to ask questions, but they're yet not flowing in the brain. So, as I said, they are very, very available. If we need any insurance package, I think we might be able to reach to her through. You can reach out to me. We can reach through our platform, youth platforms, and all will be well. Yes, over to you, Mr. Mawabeka. Yes, and that said, that brings us to the close of our great family talk today. We will meet again. Another topic will be shared. That would be we meet after every 2 weeks. So probably also this year, maybe because of some engagements, we will not be consistent at some point. But yeah, we are dedicated to ensure that we learn together for the betterment of our own. Otherwise, we want to close here. Thank you so much, Jubilee team. And thank you, everyone who has attended. Have a good night.
I've shared my contact in the chat. If you need to reach out, you can please do so. Alex, I see you wanted to know how to go forward. You can do so. Good night, family. Thank you for the opportunity to share this. Good night, all.